Hello and welcome to another episode of the Lawyers Learning Center with DHIA podcast. This season, we are celebrating insurance awareness by discussing prior acts coverage, gaps in coverage, policy benefits, and the cost of professional liability insurance. Join us here every Thursday morning as we continue to deliver insightful information on professional liability insurance, discuss business insurance solutions, and unpack the phases of running a business. Should you use professional liability insurance for cyber liability coverage? Like most businesses in today's fast-paced digital economy, you are probably relying more and more on computers and servers as the primary means of storing important client information. Not only is this unavoidable in most businesses, it also saves time, space, and effort over the paper files of yesteryear. But progress always comes at a cost. In the case of digital records, the cost of business owners involves the potential exposure to cyber attacks. But using professional liability insurance to cover cyber liability claims can be an expensive choice. First, you erode your limits. You also create a claim against your professional liability policy, and that increases your rates. You've got 3 choices for covering a cyber claim. 1, pay out of pocket. 2, use your professional liability policy. 3, use a cyber liability policy. Quantifying the risk of a data breach. According to Forbes, the average cost of a data breach is $3.8 million. Why is this average so high? It comes down to the number of individuals who can be affected in a single cyber attack. Think of each personally identifiable record you have for both prospects and clients. This includes any record with one or more of the following: name, email address, physical address, date of birth, credit card numbers, social security numbers, bank account numbers. A recent Digital Guardian report estimates the average cost of a data breach at $150 per record. This means that if you had 20,000 records in your database, the average cost of a cyber breach would be approximately $3 million. Add to that the remediation requirements. For every personally identifiable record compromised in a data breach, you are obligated by law to notify each client affected and provide ongoing credit monitoring services for every single individual at risk of identity theft. The costs of a data breach could be crippling to a small business. Mitigating the risk of a data breach. The best way to protect your business from a potential cyber attack is to create safeguards that can reduce the chances of an attack occurring. These practices should be the first-line defense of any business. Strong passwords that are updated at least annually. Limiting personally identifiable information, PII, to be accessible by only certain employees. Updating websites and web hosting when new versions are available. Updating software and computers when new versions are available. While these measures can help prevent a cyber attack, it still makes sense to plan for large financial exposures in case prevention fails. If your systems are hacked, how would you pay for the breach? We'll explore 3 options to help you decide which path towards cyber protection makes the most sense for your business. Paying for a breach out of pocket. To decide how much you need to have in reserve to self-insure for a cyber attack, one of the first questions to ask yourself is how many personally identifiable records you have. For businesses that have been around for any length of time, it would be reasonable for a database of prospects and clients to contain tens of thousands of records. Going back to the Digital Guardian estimate of $150 per record, if you had 20,000 records in your database, the approximate cost to cover a cyber breach would be $3 million. Do you have that amount of cash saved to cover a possible data breach? If not, you may need insurance to adequately protect your business. Paying for a breach with professional liability insurance. Many professional liability insurance policies do contain some form of basic cyber liability coverage. A common practice for insurance carriers is offering additional cyber coverage to a professional liability policy in order to make the policy more attractive to a potential buyer. This option may work for you, or it may not. There are a couple of caveats to consider. The first is that if you rely solely on a professional liability policy for your cyber protection, you are essentially overpaying for cyber insurance. Why? Because the cost of a standalone cyber liability policy is significantly less expensive than adding to a professional liability policy in most cases. The second is that relying on professional liability insurance to cover a cyber breach puts you at risk of exhausting the available coverage of your professional liability policy. This kicking the can down the road strategy puts you in danger of eroding your limits of liability. For example, say you have a $500,000 professional liability policy and use it to pay remediation for a cyber attack costing $450,000. This leaves you with only $50,000 in coverage for any future claims to cover exposure from malpractice, frivolous lawsuits, or simple errors that may threaten your business. Many firms decide that a less expensive, standalone cyber liability policy makes more financial sense both in the short run and the long run. Paying for a breach with a standalone cyber liability policy. If you have made the decision that a potential cyber liability exposure is simply too large to ignore, a standalone cyber liability policy can provide an affordable complement to your existing coverages. A cyber liability policy should match your practice and unique needs. This may include the number of records and the amount of cyber exposures you have. The policy should be able to grow with you and your business as your needs change and grow. Specific coverages to consider as you explore cyber liability insurance policies include the cost to notify all prospects, clients, and employees about a breach. Extortion coverage if your data or servers have been locked by a hacker who will not return the information unless you pay them, also referred to as a ransomware attack. Credit monitoring for all individuals affected. Certain costs involved with the business operations being affected due to the breach or ransomware attack. Certain privacy lawsuits. Certain fines that may be issued by government or regulatory agencies. Additional coverages, benefits, and endorsements will typically be available depending on the type of cyber liability policy and the insurance carrier who underwrites the policy. This will allow you to customize a policy to fit your specific needs and budget requirements. The potential costs of a cyber breach could be catastrophic for any business. That's why best practice is to mitigate the potential exposure of a breach through the use of a cyber liability policy. This will allow a business to affordably cover their digital exposures while also protecting professional liability policy limits for any future malpractice claims. Thank you for listening to another episode of the Lawyers Learning Center with DHIA podcast. If you found this information useful, please subscribe and share. We invite you to share your biggest takeaway in the comments and ask us a question or two. Your feedback will help us adapt and expand our topics for you, which is why we are here. If you're new here, we encourage you to listen to our first 2 seasons. Our Lawyers MBA series was created to cover the topics law school missed and is packed with actionable tips on running the business side of a law practice. Tune in next Thursday as we highlight policy benefits to look for and calculating adequate coverage for your practice.